What's going on, people? Let me drink some water. Let me drink some water. I'm going to try and explain market structure the best way I can, the most simplest way. No, market structure is a stairs. It's a seesaw or whatever you want to call it. No, for disclaimer purposes, I did not make any of this up. This came from a guy named Dave Teaches. He probably learned from somebody else who learned from somebody else who learned from somebody else. That's how knowledge works, right? I cannot take credit for this, right? This is just how the knowledge is passed down, right? So I'm not a genius. I didn't wake up and just make this up. Cannot take credit for this. Anyway, the market moves like this. First of all, why would you want to know how the market moves? You want to know how the market moves because a lot of people out there are wasting, flushing, burning them hard-earned money on depending on other people calling out signals. Why the hell would you want to do that? Right? And the people who are calling out the signals, most of them don't even know market structure. Most of them don't even understand market structure. Them probably getting them signals from somewhere else. So what you happen in the trading communities, you have a whole heap of gurus out there who they're the only people making money because guess what? Them selling courses and selling signal services and don't know shit. Right? And I take trading very important because where me come from in Jamaica, trading is the way out for a whole heap of people who can't find jobs. All of the skettle girl them can stop sell them pum pum and all the fans and all them thing there, and them can start act like decent woman again. Man can stop beg man for money, learn how to trade and support yourself because nobody is coming to save us. Right? Same way in America. Nobody is coming to save you. All right? Everybody talking about recession, and some people still don't want to get up off of them lazy ass and learn a skill that will feed them and them family. Anyway, rant done. All right, so look, this is how the market move. The market moves in highs and lows and breaks. What do I mean by that? You have a high that put in a low, right? The key thing is you have a low that put in a new high. And when I say a new high is the high broke above the old high, right? So what happened is the low that put in the new high is considered the protected low, meaning that price will come down towards it. And because it's protected, it will not break it. It will trade away from it. Just like how you have it here, you have a high, a low, and a new high that causes a break. When that break occurs, you have a zone, right? And a zone is what causes this to come down and respect this low. It respect it. It might dance around down here, might do all kind, but it will respect it to where you can make some money on the way back up. Right? Now, if this, let's say this does not, let's say this come up and make a new high, and then it comes down and runs the low, this low. Let's say it runs this low, the low that put in the new high, right? Or in this case, it would be this one because this is the low that put in the new high. But anyway, it run the low. What's going to happen is that it's going to go back up, and often than not, it's going to reverse, meaning it's going to break lows. Instead of breaking highs, it's going to break the lows and respect the highs. So you have a zone here in the opposite direction. Okay? That's the first thing you need to know in market structure. And before I continue, I'm going to show you. Can I go on a 15 minute? I'm going to show you. Look. You see, it's all over the map. High, low, high. Respect it. Trade up. Right? All over. It's everywhere. Respect it. Trade up. It's everywhere. Now, sometimes it doesn't. Sometimes it does not come back. But more often than not, it comes back. See? Create a new high. Trade down. This is the low. Trade down. Respect it. See it start moving up. It respects it. Now, this is the highest time frame. I'll give you an example. Sorry for yawning, but let me give you an example. You have this, right? Now this, sorry, wrong instrument. This is occurring over days, because I'm on the 15-minute chart. So let me show you something. To get from here to this low here. All right, sorry. To get from this high to this low, right, is 10 days. 10 days. It takes 10 days to go from here to here. 10 days. So from here to here, it takes 10 days. 10 days. So you have some people that say, oh, the market is down here. It's going to plunge down to hell. Right? But if you're following market structure, you know that, all right, I'm close to the 50%. I'm on a larger zone. If it took to this low, to this high, if it took 8 days to go from here to here, and I'm here, then I can expect for almost the same amount of days or more. But for another long time, I can expect price to go on an uptrend. Right? So if you know market structure, you can, like, okay, somebody says something, and them say you say, this is not what the chart is telling me. Oh, we're gonna hell, it's a recession, we're gonna hell, we're gonna all the way down here. I don't think so. Not what the chart not telling me that. Right? Look at this. It take 12 days. Sorry. I keep doing that. I like doing it like this. This low here, it take 11 days, right, to go from here to here. And we're down here. So some people think that, if it take 11 days to come up here, it's going to go up forever and ever and ever and ever. No. The key thing is the break. So the next thing, one of the most important things about market structure is the break. Right? The break. Whenever you have a break, you will tend to have a reversal to go back into the range. And once again, it is all over the map. So some people might say like, oh man, we're above, what's this? 100,000. Man, it's going to end up to 200,000. And you're like, I just ran a high. Maybe I should wait for a reversal. Maybe I should anticipate price to come back down. At least come back down to the 50%. Sometimes it come all the way down to the bottom. Just like here. Low, high, they come all the way down to the bottom, and people think, oh, we're going to hell, and it just trade back up, right? But the break is very important. Look at this again. Look, whenever you see a break, bam, you know that you're going to have a reversal. Whenever you see a break, bam, and the break, when I mean a break, I don't mean any break, but I mean when a protected high is broken in terms of a continuation, right? So we had not a protected high, a higher high. Sorry, when a higher high is broken. That's very important. Because when a protected high is broken, you have a reversal. When a protected low is broken, you have a reversal. But when a higher high, so for example, this high, put in this low, the higher high at the time got broken, and a new higher high is put in a pullback. So whenever you see stuff like this on the map, let's say you just turn on the map and you turn on the map and you're up here and you notice that this high get run. You'll be like, oh shit, guess what? A reversal is about to happen. Let me expect a reversal. Now, how can you expect a reversal? So if you notice the inside of, you have the larger structure here. Inside you have the smaller structure. But in the smaller structure, you have the same principle. Look, you have the low, you have the high, break, trade back to the 50%, and it gone up. Right? So you have this big structure here. You have this big structure here, and then you have these small structures here, and then you have these even smaller structures in here that's obeying. Overall, it's obeying what the big structure is doing. Look, you have, look. Smaller structures obeying the same thing. Now, sometimes it don't come back, but more often than not, it comes back. Look, it come back here, it give you a little trade up. But once again, you have a break. So when I have a break, I'm going to see the smaller structure break the protected low. This is a protected low on the smaller time frame. Look, protected low gets broken. But what happens when the protected low gets broken? We have a pullback up into the range, and then we change direction until what? We get to the 50% of the larger range. So you have some people that struggle to find the direction, right? They struggle to find what direction the market is going in. Just come on the 15-minute and you just look. You don't have to be the 15-minute. It can be the hour. It can be depending on how you trade. You can say, all right, this high got broken, so I can wait until the lower time frame low get run, protected low get run. So I'll know, okay, the direction for a couple more days since I'm on the 15-minute. Remember, I told you it took. Remember, I told you it take 9 days. 9 days. Hold on. From this point here to this point here. Yeah, it takes 6 days or whatever to get up here. So if it takes 6 days to come up, it's going to take on average 6 days to go down, right? Or almost the same amount of time to get down to the 50% or whatever, right? So just wait for your protected, the lower time frame low to occur that give you the telltale sign, the pullback. People think, oh man, we're going to heaven. It's going back up. No, I'm just pulling back up because I'm pulling back up into what? The range that the protected high created. And I'm shorting, right? And that's how you basically read price. That's how you follow structure. Let's look for a downtrend. This is the beginning of time. All right, we're in the beginning of time. All right. Let's just look for another pair or so. All right, that was a Bitcoin. Let's look for somewhere that have a downtrend. Look on some Euro USD. See. Look, downtrend. Down. All right, so yo, look. Once again, same principle, right? Same principle. Oh, we're going to heaven. We're on the protected low. And it trade up here, right? Let's say it trade up. So from, you see the protected low get run, and you know that this is a pullback happening, right? So you know you're on a pullback. Oh man, it's been going up all day. Some people, oh, we're gonna wake up tomorrow and it's gonna go up some more. Yeah. But you know, man, I just saw a low get run. Right? I just saw a low get run. I just saw a higher time frame low get run. Right? I just saw it get run. So these highs are protected, right? Same thing with here. Look. Boom, boom. I run this low. Now, sometimes you don't get the pullback, right? That's fine. Price will eventually come back here on one way or another. But for now, like this time frame is larger than these little time frames. So you just cool it. This time frame here is larger than this time frame. And this time frame is larger than these little time frames. So sometimes these little time frames could be working to get back up to this big old time frame right here. But that's not what we're concerned about right now. What we're concerned about is the highs and lows that we see right now. Look, boom, boom, boom. Straight up to heaven. No, I know we're on a pullback. So I'm expecting what? On the lower time frame, look, this low gave me a protected high. But guess what? We ran it. So I know, okay, we're going to go down. And the reason why we're going to go down because we're following the structure that's going down. And the little highs and lows create the general direction. Look, break. We'll break the higher time frame according to these little highs and lows. Right? Expect some sort of pullback, which I tell you, sometimes you don't get that pullback. And later on, I'm going to show you when to expect the pullback. But for now, just look at the highs and lows. So let's say you are expecting a pullback because you ran this low. You would wait for the signs to tell you. If you didn't get a structural change here, why would you take the chance in going along expecting it to come up to here when these little highs were not broken? This high was not broken. So just forget about it going all the way back up here and just follow the highs and lows on the lower time frame. Right? You know, big highs and lows are being broken. Just follow. Like, for example, okay, you have a run here and you say, okay, pullback time, money, and you waited like what you were supposed to do. And you saw that, okay, not yet. Aha! No, we can, okay, yeah, we just run this. Okay, well, we still have a pullback, but it's a lower time frame pullback, so it's a low pullback. Okay, no, we can follow the higher time frame pullback, right? Because guess what? The high was run. No, some people look at this and they're like, oh yeah, they forget that they're on the higher. They forget that the higher time frame is in control, and they get greedy. And they once again, what happened? They expect price to shoot up and send them up here when what? The higher time frame is in control. So we trade up here, right? Did not run it. So if it don't run it, guess what? It try run it, don't run it again. Create equal highs, right? Guess what? We're running the low. So we run this low. We run the main low here. Guess what? Pull back. When do we know to obey the pullback? When the higher time frame high get run. We say, we'll pull back up in here. And then guess what? We know the pullback short-lived, but guess what? We wait until what? The low get run, and then we go down, right? So you need to back test this for yourself. But this is how the market moves. This is how you don't get caught up in stuff like listening to signals and everything. All right. So, this is Mark. I hope you learned from this. All right. Peace.